Hello, and thank you for watching. My name is Bradford Roberts, Principal Broker, Founder, and Owner of TR Realty in the Las Vegas area. After watching this video, please be sure to like it as well as subscribe to our YouTube channel. Download the pertinent handouts for this video by clicking the link in the comments below. Now let's get started. This video is entitled Class 2 Real Estate Behind the Scenes, and this segment is entitled Insurance. I recommend Allstate Insurance. We have a partnership with Allstate Insurance, and they have been a terrific resource for all of us. 100 years ago or so, when I bought my first house, I actually purchased homeowners insurance on the morning of closing. I was young, I was inexperienced, I was not in the real estate business, and I didn't know better. And I literally opened the Yellow Pages, if anyone can remember what the Yellow Pages is, and I chose an insurance company at random. I was told that I needed insurance in order to complete my transaction. And of course, that is still true today. If the buyer is getting a mortgage, then insurance is going to be required. However, in the state of Nevada, if the buyer is paying cash, he's under no obligation to obtain homeowners insurance. Our contract that we will be getting into in Class 5, our purchase and sale agreement, has many contingencies to protect a buyer. It has a due diligence period, it has an appraisal contingency, it has a loan contingency, it has a walkthrough, it has a disclosure contingency, a resale package contingency, and some other ways out of the contract. However, at this time, there is no insurance contingency in our purchase and sale agreement. I think that insurance should be considered a due diligence item in today's world. And I remember selling real estate in Florida many years ago when quite a few hurricanes swept across the state within a very short period of time. And some of my clients' homeowners insurance premiums increased by 700% as a result of those storms. Now here in Nevada, we don't have many natural disasters, although we have had some earthquakes popping up around the state lately. But my point is that homeowners insurance should be considered a due diligence item because there's no specific way out of the contract if you don't like the cost or you don't like the coverage. So I believe that once we have an effective contract to purchase a property, that's the time the buyer should go out and shop for their insurance and procure their insurance as well. It should be part of the due diligence period. And as I mentioned a couple of minutes ago, keep in mind that a buyer cannot have the mortgage funded. We cannot be clear to close if there is not proof of coverage. And I'd like to bring something to your attention known as a CLUE report, C-L-U-E. And CLUE stands for Comprehensive Loss Underwriting Exchange. CLUE reports were born out of a necessity to try to stamp out insurance fraud. Before there were such things as CLUE reports, someone could actually obtain coverage from one insurance company, attempt to defraud them in some way, and then move on to another insurance company, and those two companies didn't share information. A CLUE report database was born, as I said, as a way to try to put down that insurance fraud. Now, the CLUE report is a database that will show any significant losses or claims on that property. Now, federal law requires that the information is stored for a minimum of 5 to 7 years. However, in practicality, that information is rarely deleted from the system. But CLUE reports will not tell us about damage on a property unless a claim was actually filed. So, if there was a sinkhole on the property, if there was flooding on the property, if there was a fire on the property and a claim was filed for any reason, that information would be visible in the CLUE report. And the reason I mention CLUE reports today is because over the last few years, CLUE reports have become a part of our purchase and sale agreement. Something else you need to know about clue reports is that they are only available for the seller. In other words, a prospective buyer of property cannot legally order a clue report for that property. The way this is handled is in the purchase and sale agreement. If the buyer wishes to see that clue report, he would make a request upon the seller. Then the seller would contact his insurance agent, obtain the clue report, and pass it along to the buyer just like he would pass along any other type of disclosure. Now, I've seen some insurance agents charge up to $20 for a clue report, but most of the time they don't charge anything for that clue report. I guess at some point over the last few years, maybe someone involved in the insurance industry was purchasing a property and decided that it might be beneficial to see what was on the clue report, and eventually clue reports work their way into our real estate contract. So that's a little bit about clue reports. I wanted you to know exactly how we handle them and what to do with them. I would like to thank you for watching this video. I hope it was informative for you. If you are licensed with another brokerage in Southern Nevada and would like to talk with me, please text me or visit our website. See you next time.